Imagine this. For the first time in 4 months, home sales are climbing. But what's really driving this sudden shift, and how is it impacting everything from gold prices to the strength of the dollar? Stick around, because in the next few minutes, we're diving deep into the numbers and uncovering what they mean for you and your money. Today, we're talking about the surprising uptick in home sales in July, why it's significant, and how it's shaking up other markets. If you're new here, don't forget to hit that subscribe button and ring the bell for more insights like these. In July, existing home sales rose by 1.3% compared to June, marking the first increase in 4 months. This might not sound like much, but in the world of real estate, it's a big deal. The National Association of Realtors reported that this brings the seasonally adjusted annual rate to 3.95 million units. But here's the twist. While sales are up month over month, they're actually down 2.5% compared to last year. So what's really going on here? One of the key takeaways is the regional variation in sales. The Northeast saw the biggest jump, while the Midwest remained steady. Prices in the Northeast also rose the most, indicating that this region is driving much of the overall increase. But even with these gains, Lawrence Yun, the chief economist at the National Association of Realtors, warns that home sales are still sluggish. The good news? Consumers are seeing more options, and affordability is improving as mortgage rates dip. These sales are largely based on contracts signed in May and June, when mortgage rates were over 7% for a 30-year fixed-rate loan. Fast forward to July, and rates started to decline, now hovering around 6.5%. This drop is making home purchases more attractive, but it's still a challenging environment for first-time buyers. Interestingly, the inventory of homes for sale increased by 0.8% from June, and it's nearly 20% higher than July 2023, yet this hasn't led to a significant decrease in home prices. Switching gears, let's talk about the Purchasing Managers Index, or PMI. The PMI is a key economic indicator, and the latest numbers for August were a mixed bag. The manufacturing PMI came in at 48, below expectations, while the services PMI beat estimates at 55.2. So what does this mean for the markets? Well, as soon as these numbers were released, we saw global gold prices drop significantly, with futures falling by 1.3% to $2,515 per ounce, and spot prices down 1.34% to $2,479 per ounce. Meanwhile, the U.S. dollar index rose by 0.54% to 101.45. So, what does all this tell us? The housing market is showing signs of life, but it's still facing headwinds from high mortgage rates and affordability issues. At the same time, other sectors of the economy, like manufacturing, are struggling, which is causing ripple effects across different markets. As always, staying informed is the key to making smart financial decisions. If you found this breakdown helpful, make sure to give this video a thumbs up and share it with others who want to stay ahead of the economic curve. And before you go, let me know in the comments, do you think the rise in home sales is a sign of recovery, or are we in for more turbulence ahead? I'd love to hear your thoughts. Thanks for watching, and I'll see you in the next video.